You know that little feeling in your stomach when someone says the words reverse mortgage and your brain instantly goes, wait, does the bank end up owning my house? Well, if you've ever thought that, stay with me for a minute because that belief is one of the biggest misunderstandings I hear. And it stops a lot of good people from even looking at something that might actually help them. Now think about your home for a second. It's not just a building. It's your castle. It's years, sometimes decades of working, raising kids, paying bills, and making it through some pretty tough times. So the idea that you could sign one paper and suddenly the bank owns it, yeah, that's a pretty hard no for most people. So today, let's clear this up. No pressure, no sales pitch, just the truth, in plain English. My name is John Watkins, and I'm a licensed mortgage broker, and helping people understand reverse mortgages is one of the main things I do. All right, let's go straight to the big question. Does the bank own your house with a reverse mortgage? No, not even a little bit. You still own your home. Your name stays on the title. Your name stays on the deed. Period. Let's think about it like this. Imagine your house is a lemonade stand. You built it. You run it. It's yours. Now a lender comes along and says, hey, if you want, we can lend you some money using your lemonade stand as collateral. But they don't own the stand. You do. They just have a lien. That means one simple thing. If the lemonade stand ever gets sold, they get paid back first. That's it. Same as a regular mortgage. Now think about back when you had a normal mortgage. Did the bank own your home then? No, you owned it. The bank simply had a lien which basically says if the house gets sold or refinanced, they get paid back. A reverse mortgage works on that exact same structure. The only big difference is how and when the loan gets paid back. So where does the fear come from? It usually comes from one moment when the loan becomes due. With a reverse mortgage, the loan usually becomes due when the last borrower permanently leaves the home. That could happen if you sell the house and move to assisted living or pass away. And when that happens, your family has options. This part really matters. Your family has options and they can sell the home, pay off the reverse mortgage, and keep all the remaining equity. Or they can keep the home. They simply refinance or pay off the reverse balance, and the house stays in the family. So no, the lender does not just take the house. That's a myth. Now here's something else most people never hear clearly. The reverse mortgages are non-recourse loans. That's a fancy term for saying something simple. It means the home itself is the only thing that repays the loan. So if the home sells for less than what is owed on the mortgage, you are not responsible for the difference. Your family is not responsible for the difference. That's not a loophole. That's exactly how this product is designed. Now you do have some responsibilities, and I want to be really clear about this. This matters. To keep the loan in good standing, you still have responsibilities which include you must live in the home as your primary residence, pay your property taxes, and keep homeowners insurance active, and maintain the home reasonably. If someone stops doing those things for a long time, then the loan could become due. But notice what's happening there. They're not taking the home because it's a reverse mortgage. They're enforcing the same rules that exist in every other mortgage. If someone doesn't pay property taxes, that's a problem, whether you have a reverse mortgage or a regular mortgage, or no mortgage at all. So here's a real question I ask people. Are you afraid of a reverse mortgage because you're not understanding it? Because confusion creates fear really fast. Sometimes after a simple conversation, people say, okay, this isn't right for me. And that's perfectly fine because that's an intelligent decision. But other times, especially for people who have a home that's paid off or almost paid off, who are living on a fixed income while insurance goes up, taxes go up, and everything else goes up, they realize something. Wait, I can stay in my home, keep my name on the deed, create some breathing room, and not leave my kids with a surprise bill. That's actually pretty amazing. Now, the purpose of this video is not to talk you into anything. It's simply to move you from the myth zone to the fact zone. And once you understand the facts, then you can decide what's right for you. So if you'd like to have a simple 5-minute conversation to see if a reverse mortgage might make sense for your situation, just comment below. Or you can click the scheduling link below. Either way, I'll get with you and we'll have a short talk. No pressure, just clarity.